Are you an entrepreneur who needs proper accounting knowledge? In today's episode, I'm going to talk about the chart of accounts. Welcome to the Digital Transformation Academy. My name is Dennis Hilario and I'm here to help you in your digital transformation journey. Let the show begin. Hey, welcome to the Digital Transformation Academy podcast. My name is Dennis Hilario and I'm going to give you my best thoughts and tips about digital transformation, creativity, and innovation. Again, if you haven't already, kindly smash the like button and click the subscribe button so you can be up to date of my episodes every Mondays, Wednesdays, and Fridays. This episode is again brought to you by my Accounting Starter digital course. So go to accountingcourseph.com. It is a 6-module course that gives you the basic definition of accounting terms, government compliance, up to accounting computerization. So it comes with a 6 months free access to our own accounting online software. Again, kindly check out the link, accountingcourseph.com. And for this month, I have a very surprising offer for you. So kindly check it out. So let's dive into the topic. So what is chart of accounts? So a chart of accounts, or COA, is a list of categories used by an organization to classify and distinguish financial assets, liabilities, and transactions. So basically, it is used to organize entities' finances and segregate expenditures, revenue, asset, and liabilities in order to give interested parties a better understanding of entities' financial health. So for you to understand it better, I'm going to give you some chart of account examples. So number one, of course, we discussed in the previous episode the term assets. But assets are normally divided into two. One is the current assets, which is the company's assets that are expected to be conveniently sold, consumed, or used through standard business operations within 1 year. So while the non-current assets are the assets that the company has over 1 year. On the other hand, current liabilities are companies' short-term financial obligations, so that are due within 1 year as well, similar to current assets, while the non-current liabilities are obligations of the company over 1 year. Then we have the owner's equity, which is normally comprising of the capital stock, which is the initial investment, and then the retained earnings are the accumulated profits or profit or loss from the time you started the business. Then another main account is the revenue, which is the top line revenue or income of the company. And then the expenses are the cost of goods sold, the direct cost, the operating expenses, and the administrative expenses. To give you a more detailed example of assets, we have cash in bank, which is your bank accounts, basically. Then you have your cash in hand, which is like your petty cash or undeposited collections from your stores if you are into retail. And then another example of an asset is, of course, the accounts receivables, which are your accounts receivables to your customers or to your employees or partners. And then we have the inventory. Inventory is the value of your items inventory in your stock. Then we have your prepaid expenses. One example of prepaid expenses is, say, your deposit to your lessor if you're leasing an office. And then we have an input VAT. An input VAT is also an example of an asset because you can actually use it later on as a deduction to your output VAT or your revenue VAT. No. Then we have non-current assets like vehicles. So obviously, vehicles can be consumed more than 1 year once you buy it. The land or real estate is another example of your current assets. For current liabilities, examples are accounts payable or accounts payable trade. So these are obligations due within 1 year or less. We have accrued salaries is also a liability, which is payable to your employees. Contributions payables like SSS, PhilHealth, or Pag-ibig are liabilities as well that are due immediately or the next following month. And then examples of non-current liabilities are long-term loans. As a bonus, I'm giving you a complete list of a standard chart of accounts, which is downloadable in the below description. So it comes with the proper coding, which is a generally accepted coding. So when you say coding, these are account codes that you use, that you tag into a particular chart of accounts. So normally this is done so you can organize and sort your chart of accounts in an organized manner. So this coding as well can be used later on if you want to computerize your accounting system or you upload your chart of accounts to your accounting software for easy searching or lookup of this chart of accounts. So the standard coding normally is you start with number 1 if it's an asset, number 2 if it's a liability, number 3 if it's an equity, number 4 is your revenue, number 5 is your direct cost, cost of goods sold or cost of services, and then number 6 are your operating expenses or administrative expenses. You can also add up additional number 7 if you want to include miscellaneous income and or miscellaneous expenses. So for you to have a complete picture of this chart of accounts, so normally when you book a transaction, I know you've heard the term journal entry. So you select a chart of accounts to use every time you do a journal entry, and then when you post it to your ledger, now this account, which is part of the chart of accounts that you use in your journal entry, will have a corresponding ending balance. So that ending balance will now be rendered or shown in your financial statement, like a balance sheet account. So you'll see there the balance of your cash in bank, your receivables, and of course your payables and retained earnings. In the next coming episodes, we will discuss in detail how to interpret balance sheet and income statement. But for now, this is for you just to appreciate the value of using chart of accounts. For P&L accounts, if you have a sales income account or revenue account, and then sometimes you also include sales discount, which is a negative balance in your P&L. And then the rest of your expenses in your chart of accounts will be shown or rendered in your profit and loss. For example, your rent expense for the month, salaries and wages for the month, marketing expenses, and whatnot. So each of these accounts will have a general ledger that shows the increase and decrease of the value of your account. So that is what you call your general ledger. And again, I'm going to provide you a downloadable standard chart of accounts that you can use initially for your company. You can just add or modify and remove accounts that are not applicable to you. So I hope that will provide you more value, especially when you intend to computerize your accounting process. So in the next coming episodes, I'm going to be providing some example reports that you can use in your daily or day-to-day accounting process. Again, thank you so much for watching and listening. So DX your life and business. Have a great day.